Alrighty, folks, we are live. Welcome, welcome. So good to have you on. It is Wednesday morning, and I hope you guys are doing fantastic and your week is going well so far. Well, folks, we have to address the elephant in the room, and it is not good news, unfortunately. It looks like things are only getting worse. Just when we thought maybe there'd be some upside here, maybe we reached the pinnacle of how bad things could truly get. Unfortunately, the data just shows otherwise, and it shows that this inflation and this economy is not slowing down or stopping anytime soon. So, guys, I want to get into this live. Let's get started, dive right in, but I want to do a quick sound check. So, make sure you guys do let me know where you're tuning in from, city, state, location, whatever you want to tell us, and I'll do a quick little sound check on my end to make sure we are good. And things sound swell. Welcome, welcome everyone. How's it going? Say something in the chat. How are you doing? Anything special you guys did over the last couple days? Fantastic. All right, we do have a lot of people hopping on here. Thank you so much for joining us. I do appreciate the support. Folks, I want to get started and dive right in again. Let us know where you're tuning in from, city, state, location. Make sure you smash the like button on this live stream. If this video does get to 500 likes, we'll do a cash giveaway where we give away $100 to a few of you lucky subscribers. If you haven't already, make sure you are subscribed and have those notifications turned on. Once we hit 20,000 subscribers, we'll do another cash giveaway. And so a couple opportunities for you guys to make some free cash, all me, all free. With that being said, also guys, fourth federal stimulus check petition. For that petition, you can see it in the link in the description of this video or in the top pinned comment. And make sure you sign that petition if you haven't already and share it with your friends. Spread it on social media, get the word out. We're going to need a lot more signatures if we want to get our voices heard. But we have gotten quite a bit of signatures already. Okay, with that being said, I think we're ready to get into the news. So, what is going on, guys? Well, if you guys have any money in the stock market, you probably took a huge hit today, or yesterday rather. And that was the case with myself as well. And you would say, well, how about just not lock in those losses and don't sell? But unfortunately, I'm going to have to sell eventually. I'm going to be buying another property. Got an offer accepted on it on Monday and inspecting actually today, later today. And so we'll see what happens with that. Probably going to be moving forward. And so I'll have to liquidate all my stocks actually in order to buy this property. And so I might have to lock in some of those losses, unfortunately. Can't always get every dollar and nickel that you hope for. So you got to prepare for the worst. So with that being said, U.S. inflation ticked back up in the month of August despite plunging gas prices, according to the data from the Bureau of Labor Statistics released on Tuesday. So things were looking up, guys. We thought maybe economists were right and this inflation would start to tick down slightly towards the later half of this year. And, with the gas prices also coming down and people seeing relief at the pump finally, you would think that we saw the worst of it in the early summer and now we'd be coming off of these highs and finally we could start looking up and more optimistic. But unfortunately, that's just not the case. On a monthly basis, consumer prices rose 0.1% from July, according to the Consumer Price Index, or CPI, which measures a basket of consumer goods and services. Economists had projected that inflation would fall from July to August by 0.1% after holding steady at 0% growth from June to July. So this even shocked economists, guys. Even some of the top experts and economists in the world couldn't have foreseen this. Annual inflation eased for the second straight month, but also remains stubbornly high, with prices up 8.3% year on year, a slowdown from the 8.5% gain in July and the 40-year high of 9.1% in June. The last time the headline CPI rate declined in consecutive months was the first part of 2020. Core CPI, which strips out the more volatile categories like food and gasoline, measured 6.3% in August, up from 6.2% in July. The month-on-month gain of 0.6% was double what economists had expected. U.S. stocks immediately tumbled on this news. The Dow, first it was like 600, then it was 700, then 800, and then I thought it was going to come back and recover, and that was just a deep sell-off, and finally there'd be some bit of a dead cat bounce. But then I checked back, and the Dow was down over 1,100 points, guys. So this was a horrible day, the worst since, I believe it was June of 2020. We haven't seen a day so bad like that since June of 2020. Unbelievable that we're still in this era here and in this time where you could see absolute drops like that in the Dow. But of course, as the Dow gets higher, we do have to anticipate drops like that because percentage-wise, it may not be as large, right? But that point-wise, of course, it may proportion out. So, of course, do understand that as the Dow reaches higher and higher records, that we have to kind of acclimate ourselves with these massive point drops, especially in this inflationary economy when it all hinges on what the Bureau of Labor Statistics is going to release about the inflation data. Investors worry that the Federal Reserve will have to take more drastic action to combat high inflation, and so that's why investors were quick to sell off. A prolonged period of historic rate hikes could do serious damage to the U.S. economy. Historically high inflation remains a point of pain for many Americans, especially those with little wiggle room in their monthly budgets. According to a professor, Sung-Won Sun, and an economics professor at Loyola Marymount University and president of SS Economics. She said, quote, "We were hoping for something more positive, but the August data is not. I think inflation is certainly alive and well." The volatile gasoline category was the only area of the index to show a significant decline from July, dropping 10.6%. Almost all of the categories saw price increases, including shelter, which increased 0.7% in August and is up 6.2% year on year, the largest increase since 1991. According to the economists, if you look at the underlying trend, I look at labor costs and rent increases, they both are pointing in the wrong direction and going up at hefty paces. And so this will be scrutinized by the Fed ahead of its policy-making meeting next week. The Federal Reserve won't be happy until the job market and wage growth significantly moderates and core inflation falls back to its target. And so the Fed is not done, guys. They don't care what Americans are feeling. They don't care how households and families and people that are just at their wits' end, they could barely even survive and are becoming homeless. They're falling into poverty. The Fed doesn't care, guys. They're just going to keep raising those rates, and they're going to keep doing their job. They believe that's what they were told to do, and that is their job as a central bank. They're just going to keep raising those rents, or rather the rates, and that will obviously affect things like rent and other areas of the economy. So I'm curious, guys, have you seen any relief, or is inflation still bad for you? Like, let's say in your area with your gas prices. Let us know in your town what are the gas prices looking like. Have you seen any relief at the grocery store, or are prices still going up, guys? Let us know in the live chat here. I'm curious if you see any relief, any reprieve whatsoever. All right, we do have some responses here in the live chat. All right, so basically what it looks like here is people are still struggling, guys, and it looks like nothing's coming down anytime soon. The Fed has been tightening its monetary policy in recent months to help rein in the highest inflation in 4 decades, implementing back-to-back supersized rate hikes of 75 basis points. Certainly that is affecting investors as well, like myself. When it comes to actually purchasing property, of course, these interest rates are nearly double digits now, especially with the loan types that I obtain. And I still can't believe, guys, that my first ever property, I had to look back at it again at the mortgage statement and remind myself that I was able to get an interest rate of 3.25%, and I barely bought down that rate. And that was early last year. And just in the course of a little over a year now, not even, if you want to look at earlier this year even, so the rates have just gone up, and it is nearly impossible for anyone to really thrive in this economy right now. And unfortunately, the people that are really thriving are the wealthy. And when you look at the money just trickling up to them, and they're able to raise their prices, and that's certainly increasing profits. If you see what's happening with the gas companies, they've made record profits during the insane gas record highs. And so that is what's happening here, guys. The poor are getting poorer, and the wealthy are just getting wealthier. So, folks, we're going to see what happens here with this inflation data, and maybe, just maybe, this was the peak. Maybe we can hope for better numbers that come out next month for September. Maybe we'll have a better outlook, and things will look on the up more so in the later quarter, the last quarter of this year. Probably may not be the case, but we'll see what happens, guys. We want to just kind of keep ourselves in check here and make sure that we are prepared for the worst to come, right? Because, especially with the election coming up with the midterms, I think the markets are also going to react to that. Not necessarily the Fed, But certainly the stock market might be volatile, not just with the Fed rate hikes, but also with the midterm elections. And so the Fed's going to have to react differently. Rather, the stock market might react differently to what's going on with the midterm elections and who ultimately stays in control and power. We'll see what happens with that. But more news and updates are to follow suit. Hope you guys enjoyed this video. Hope you got value out of it. If you did, go ahead and smash the like button. I'd appreciate that. Make sure you are subscribed and have notifications turned on. If you guys want to get some free stocks, all mail free, use the links down below in the description of this video. Sign up with the brokerage platforms Robinhood and or Webull. You'll get some free stocks, some valued to thousands of dollars in some cases. So let us know what stocks you get. And if you want to connect me on social media, I am on Instagram, I am on Facebook, I'm on TikTok. Use the social links down below. I look forward to seeing you guys in the next video. Take care for now.